Hey guys, how's it going? It's Andy from MagooInvesting. Welcome back. I had to take a week and a half break, which I posted about on the discussion post side of YouTube, because I had a lot of things due last week. For the past 7 weeks, while I've been taking classes, I keep mentioning the fact that I thought I might have to take a little bit of a break and focus on school. And for the first 6 weeks, things were going pretty good. I was able to balance making YouTube videos and doing schoolwork. But this past week, I just got bombarded by having to read a 300-page psychology book, write a 12-page paper on that book, and then write another 10-page paper on whale migration. So last week was kind of a lot. Yesterday I had to drive to the coast and for a job interview, and I'll just kind of put up what the coast looked like. Overall, I kind of make fun about the Oregon coast because you think about, oh, you're going to the beach, things are going to be great. Most of the time, the Oregon coast, it is absolutely miserable. But when I went yesterday, it was a perfect day. The picture does not do it justice that it was probably blowing around 50 miles an hour, but it was nice to go take a little bit of break from school and go by the coast. So in today's video, I'm actually going to be discussing some of the broad topics that I talked about in my 12-page research paper on psychology. Because psychology is a very important aspect of trading. People often say that trading with emotions is a bad thing. But I'm here today to kind of discuss why I think that's totally unrealistic to be trading without emotions. If you're trading without emotions, you're pretty much just a computer at that point. And emotions are a very vital part about trading. And I think being able to understand some of the emotions that are going through your head while you're trading is a very important aspect of being a successful trader. So in today's video, we're going to be talking about some of the things I learned in my psychology class, and then I'm going to be talking about some of the market news events that I've missed for the past week and a half that I've been gone. More specifically, we're going to be talking about Tesla, what I think about that, and then the recent news today from Apple. Before we get started, I got to say that I'm not a licensed financial advisor, and I highly recommend talking to a professional, someone that can find you the best places to put your money going forward. In addition, I really appreciate if you hit that like and subscribe button, as it would help my channel out a lot. So probably the biggest thing that I learned from the psychology book that I had to read is that humans and their brain are lazy. That's pretty much the general idea of it. But that's fine. Everyone is exactly the same. And so in this video, I'm going to be discussing some of the broad topics that I learned, and we're going to try to relate it to stock trading. The first thing that I want to talk about is called heuristics, which are basically shortcuts that the brain goes through to make your life a lot easier. Think about if you are learning a new program. Maybe it's something like my video editor. The first couple times you do it, it's a real struggle. You have to put a lot of effort into making it work correctly. But after a couple times, after some learned experiences, you learn a bunch of shortcuts that make it a lot easier. And that's kind of what your brain's doing. So the first one I want to talk about is called the affect heuristic. Basically, affect means how much you like or dislike something and how that affects the decisions that you make. And how I want to relate this to stocks is I've been very vocal about how I love Snapchat, ticker symbol SNAP, as a stock. And a couple weeks ago, it fell after earnings. And because of how much I really enjoyed the stock, my initial thought was, oh, the analysts, they're too old. They don't know enough about this company to give it the appreciation it deserves. And that was just kind of my initial response. And that just led me to assuming that these analysts that have been doing this for decades don't know enough about the stock to make a correct interpretation of their earnings report. And that's just kind of the way my brain works. When I talk about my requirements for taking a position in a stock, the first one that I talk about is that it has to be something that I use and love the product for. And so this affect heuristic is getting really deep into my brain, as it's the baseline for my requirements for taking a stock. Also, it really influences the way that I perceive news about the stock. So how I want to explain this to people is that it's important to understand that you're going to be biased towards companies that you really like when news comes out. I think it's really important to see a wide range of people talking about the news, because when I see a news report, as I made a complete video about the Snap earnings, if you missed that, I'll throw that up right now, but I talked about how I looked at it and I saw a lot of positives from it. But I think it's important to read discussions from people that are very opposite from the way that you're thinking, just so that you can get a wide range of information. Even though it may not be something you agree with totally, seeing other people's trains of thought can open you up to having a more complete understanding of the stock that's not pushed in one direction from your biases. I do this a lot with sports. I have my very set in stone opinions on sports, and then sometimes I'll go on ESPN and watch people like Max Kellerman, who is notorious for stirring up controversy by saying things that I assume as being really dumb when they're first said, but it forces me to think more critically about the arguments that I would make to oppose his thoughts. And so going on to some other sources and finding news talking about as Snap fell, why this is a bad thing for the stock, gives me a better understanding of my argument for why I think that Snap is still a good investment. This effect heuristic can also be applied to people in general. I assume that most people don't have that much of trust with me, but for people that follow stuff like CNBC, Jim Cramer is someone that I respect a lot. And when I hear his opinions on Twitter, I automatically just kind of assume that it's a good opinion. And so just because one person says that it's a good idea doesn't mean that you should follow it blindly. I've seen this a lot in a lot of these stock market trading groups that I've been a part of on Discord. The leader of the group will come in and say something like, oh, take a look at this stock. And people, because they trust him, because they have an affection towards this person, trust them with their money. And this is something that I fell into. I ended up trading natural gas for a long time because the first person that I found on YouTube about stock market and investing was heavily trading natural gas at the time. And so stepping back and not following someone blindly and their advice is really important. The next heuristic I want to talk about is called the availability heuristic. And this has become a lot more of a problem as social media, and I guess myself on YouTube, has become more prevalent. The availability heuristic says that as information is more readily available and you see it more often, it's easier for the brain to retrieve. And when information is more easily able to be retrieved, the brain just kind of assumes that it's the correct answer, even if this is the wrong idea. You can see this a lot on social media. When stuff that's incorrect gets spread like wildfire, people see it a lot and just assume that since so many other people have shared it and it's been in their brain a lot, they think it's the truth. The most recent example I can think of on social media is I don't even know how to describe it. It was one day I came back from class and my roommates were balancing brooms in the living room. And I walked in, I was like, what are you guys doing? And basically they had seen on social media that apparently the moon and the sun were in a specific alignment, and it made it that brooms were able to balance a lot easier than normal. And since they had seen it more often, their brain just assumed it to be the truth, and they'd seen it from a reliable source. And if you stop and kind of engage your brain a little bit and think about it, you would come to the realization that this does not make any sense whatsoever. Why is it that brooms are the only ones that are able to balance easier than anything else? Why can't I stand at a 90-degree angle and be able to balance perfectly? So if you stop and think about it, you'll realize that it's totally ridiculous. And this can happen with stocks a lot. When you get into the group mentality of someone says something positive about a stock and you see it over and over that people are very bullish on a stock, it'll make you more likely to feel the same way about the stock. And this is something that I have tried to avoid from myself a lot. This is the idea of hopping on the bandwagon with a stock. This is something that's really popular right now with Tesla, which is something I'll talk about at the end of this video. But as more people have seen how well the stock has been doing, it's been talked about a lot more. And when there's more press about it, people see more positive information about it, and their brain is more likely to associate Tesla with something that's good and more likely to take a position. And so I'm bringing this up because I think it's important for people to step back and not just follow the trend. The trend is your friend, but in some scenarios, if you follow blindly into a trend that you don't understand, it can end up really poorly for you. And that's happened with me in the past with natural gas, trading gold, and just stuff like that. So just because other people are trading it doesn't mean that it's a good idea for you. And then the last thing I want to talk about is just how emotions affect your brain when it comes to trading. A lot of people assume that when you're in a good mood, your brain's going to be working a lot better than it would be if you're in a bad mood, which is actually the complete opposite. When your brain, or when you feel happy, you're sending out hormones that make you more trusting, happier, and the trusting part is very important for trading. If you're in a good mood and you see a stock that you may want to take a position in, you're going to be a lot less critical about how the stock market's moved, kind of the recent news events, maybe you see earnings are coming up, and you're going to trust the stock a lot more than if you're in a bad mood. A lot of people assume that when you're in a bad mood, you're going to be making bad decisions. And psychology has shown us that when you're in a bad mood, your brain thinks more critically. And when it comes to the stock market, thinking critically is very important. When you're in a good mood, you're more likely to take a rush decision. Maybe that means that you don't really look into all the information and you just see the charts. You don't want to miss out and you blindly take a position. So just because you're in a good or a bad mood doesn't mean that you should avoid trading in the stock market. The reason I'm making this video is so that maybe if you're in a good mood, you'll stop for a second and think and try to engage that other part of your brain and get all the full information about the stock instead of just feeling, you know what, I'm in a good mood, the stock looks good, I'm going to take a position. I'm hoping that people will step back, understand the way that the brain works, and kind of slow down. This is why I heavily recommend that when you find a stock that you like, you don't buy it on the same day. This is even before I had learned about the psychology part. But the reason behind that is if you see a stock and it looks good and maybe it's moving really well that one day, you're going to be a lot more likely to want to take a position in it right then. If you give it 24 hours, you have to sleep on it. You have to think about all the ramifications that would happen if you took a position. It'll probably make you more likely to research more about the stock and have a better understanding of the position you're about to be taking. And so it's just something that emotions are a important part about trading. And people kind of always think about emotions and trading as being a bad thing. Emotions are always going to be a part of trading unless you're trading like a robot. And so understanding the way that your brain works and kind of thinks about these situations, I think is a really underappreciated perspective into the stock market. Going off of emotions and people hopping on the bandwagon, today we're going to be talking about Tesla a little bit. This was something that I made a post about in my discussion area on my YouTube channel, asking, do you think it's going to continue up to 1,000 or do you think it's going to have a very large pullback? And people were pretty split on it, and when I put up the charts right now, I'll put an arrow to where I posted that post and then the pullback that actually did happen. So Tesla has been chugging along. This was a stock that I owned at $200, I sold at $275, and I missed out on a lot of profit. Does that make me want to take a position in the stock? Yes, because it was a company that I liked, so I have the effect heuristic involved. The availability heuristic of I've seen so many people talking about it. It's all they want to talk about on CNBC and platforms like that. But it's something that I know that when I've stepped back and I've looked more into it, obviously it's not a good deal right now. It has been pumped up so high. Do I think it's artificially pumped up? No. But when a stock moves this high, this fast, there's a lot of warning signs. That pullback that I mentioned was over 10%. And the way the stock's moving right now, if you get in at the top, it could fall 20% in a couple days. I don't think that's going to be the case, considering a lot of financial banks have been increasing their price outlook for the company, which is very surprising. Tesla has been a very heavily shorted company over the past couple years, and seeing these well-established places increasing their price targets kind of surprising to me. Tesla is not a good deal right now, and I think a lot of people would agree with me on that. Just the returns that people have seen in the past couple weeks makes people more likely to try to take a position in it, which is part of the reason why it's being pumped up so high. They've seen the past results, they buy into the stock, and when people buy the stock price goes up. And so this might cause a bubble. Basically, the problem with the stock moving this fast is that people see the amount of returns that they've gotten and they want to lock it in. And if some whale, as they call it in the Bitcoin market, comes in and sells a bunch of shares, it'll push the stock down. Tesla, less likely to be affected by a bubble bursting than Bitcoin because of the amount that's being traded per day, but I think it's likely that we will see another pullback in the next couple weeks. It's not something I will be taking a position in anytime soon. I missed my window, I'm totally okay with that, and I will sit on the sidelines, keep it on my watch list, and just kind of see what happens with it, because it's really interesting how fast it's moved up after being pushed to 52-week lows just a couple months ago. And then finally for this video, I want to talk about the Apple news that came out today, where the stock fell around 2.5% as a result of the coronavirus, most likely going to be affecting their financials for the next couple quarters. And this is something that's not really a surprise. Coronavirus has been talked about a lot in the news. I think it's pretty well understood that it's a problem, people are dying, and it is spreading. However, I don't think this is a panic button. It's not going to be something that's going to push us into a recession, so I'm not super worried about it. It will be interesting to see how it affects earnings for the next couple months, but I don't think this is a reason to sell from the stock market. I charted some of the major health warnings in the past couple decades and the effect that it's had over the course of that lifespan. And most of the time, it was like 95% of them didn't have any negative impact on the stock market overall. I think that the media is kind of hyping this up to something that it's not really, and when people hear all of this negative information about the world economy, stuff like that, people get a little worried. And when that happens, people are more likely to sell and push the stock market lower. I don't think this is going to be a huge impact, but if earnings come out in the next couple months and it continues to be pushed down, I think if that is a buying opportunity, not as a red flag to get out of the market overall. That's just my opinion. I'm really curious to see what you guys have to say about stuff like Tesla, stuff like the coronavirus affecting the stock market. Let me know in the comment section down below. Thanks for watching this video. I'll be back with a more normal video where I talk about one topic overall, but since I've been gone for about a week and a half, I thought I'd kind of recap some of the big news affecting Tesla and just the coronavirus and how it affected Apple stock this morning. So thank you guys so much for the support, and I'll see you in the next video.